Adobe is the leading company in creativity software. They have a very strong subscription-based business model and are actively trying to lean into AI in order to not get replaced by it. Today, we're going to look at the two cases whether or not buying Adobe could make sense at today's price. So let's look at the numbers. Last year, they made a revenue of around $23.7 billion with a net income of a bit over $7 billion, which gives them a profit margin, very solid profit margin of 30%. And currently at today's price of 300, that gives them a price to earnings ratio about 17. They are currently a bit down historically from their price, so it might be an interesting buying opportunity. But in order to evaluate that, we're going to look at two different cases. First, a more negative bear case. We're going to look at the next 5 years. We're going to give them a bit lower revenue growth of 7%, a bit lower than the analysts' expectations for these next 5 years. And we're going to assume that their profit margin dips a bit, goes a bit lower, that other companies that are coming from the competition are buying into that profit share. And they still have a big share buyback program going on. So I would assume that they still buy back at least a couple of shares in the next 5 years. But even then, Adobe is still a great company. So I would, if they're currently trading for a 17 PE, it's maybe a bit hard to justify a 20 PE. But if we assume that an average company has a PE of 16, I think a higher PE than 16 would be more than satisfiable for Adobe. So I would go with at least an PE of 18, even for this bad case. And if we look at the results from this, we get a future price of around $525. And if we would buy it at today's price, we would get an 11.8% return. Even for a bear case, that is not too bad. Now let's look at a better bull case, still the same 5 years, but this time a 12% revenue growth. Imagining that they get a lot of AI growth still into the future and other subscription improvements and so on. And a profit margin, I think this should be a 34, not a 24. Assuming that they can even further improve their profit margin, increase their staying power in the game, and maybe use some extra cash to buy back even a couple more shares. And a PE of, let's go with, I think 24 is more than enough for such a big company that's still growing at 12% revenue growth with a 34% profit margin. I think that is justifiable for a PE of 24. And if you look at the results, that would take the stock price to around $1,189. And if bought at today's price, that would give it a 31.69% return. So if we combine these two cases into an average, we would get an average stock price of $875 in the next 5 years, which would give it a very respectable potential return of 23% if these assumptions about the future come true. So I personally already hold a small position in Adobe, and I've been buying as the stock went down. But please keep in mind, don't buy any stock just because someone on the internet says so. This is a great starting price to do your own research and maybe look into the company, because it could be a potential buy. But that's just what I think about the company. If you have any thoughts on it, please let me know. And I will see you in the next one. Bye.